Hey everyone, welcome back to another video. In this video, I'm going to be looking into the recent third quarter earnings announcement that came out for Tesla. As we can see right here, Tesla is, over the last year, down about 35% in the same year that the overall S&P 500 is down 14%. And over the last 5 years, the S&P 500 is up about 50% and Tesla is up almost 1,000%. They actually were up about 1,000% or more than 1,000% at their all-time highs. So in this video, I'm just going to look into a little bit of the news that's come out about Tesla and some of the things that Elon Musk has said about the future of the company and some of the results that they produced for the prior quarter. And then I'm going to look into their financial statements so we can get a better understanding of the financial health for the company. And then lastly, I'm going to try to figure out the intrinsic value per share for Tesla's company so we can know what a good buying price would be to buy into Tesla from a value investing perspective. So thanks in advance for leaving a like on this video. It really helps this video get recommended to more people on YouTube. So really appreciate that, and let's get right into it. So as we can see right here, this is Tesla's website, and in the third quarter, Tesla actually produced about 365,000 vehicles, and they delivered about 343,000 of those vehicles to their customers. So they pretty much sold almost every single vehicle that they produced in the third quarter. And on top of that, Tesla plans to grow their manufacturing capacity by about 50% annually on average for their vehicle deliveries. So this right here is their Gigafactory in Nevada. And that's obviously some pretty substantial growth, especially considering the fact that they delivered 343,000 of their 365,000 vehicles in the third quarter alone. And they're basically saying that they're going to grow that at about 50% annually. So that's a ton of growth in the future for Tesla. And so one of the main things that some investors were scared of when it came to Tesla's recent earnings is that their deliveries fell short of expectations for quarter three, and so that ended up causing some investors to sell their stock. But Elon Musk, CEO of Tesla, obviously he had a little bit to say about that, and then on top of that we can see that longtime bullish investor on Tesla, Cathie Wood, actually ended up investing a little bit more money into Tesla recently. So clearly her conviction about Tesla hasn't really changed, but some of the investors have been a little bit spooked as a result of the recent earnings announcement. But in the earnings call, we can see right here, they point out that Elon Musk basically said that he believes that there's going to be excellent demand for the fourth and final quarter of their fiscal year 2022. And he basically expects that Tesla is going to sell every single car that they make as far as the future can see. So basically from that, as this next paragraph sums up, he's basically saying that he doesn't really believe that the problem that Tesla is facing at the moment is that there isn't going to be enough demand for their vehicles when they're growing their manufacturing capacity at 50% compounded annually, right? He's basically pointing out that there are other bigger challenges that Tesla faces, like supply chain disruption, so actually being able to meet the demand for all of their vehicles, inflation, global energy crises, and then also rising interest rates. And so those are some of the main problems that he pointed out that Tesla's facing. And so I guess we'll just have to wait and see how that pans out in the future. But we can see right here, this is their earnings report, or one of their shared documents for their last earnings report for the third quarter of 2022. And this is their income statement right here. And they basically break their revenue line items down by each revenue segment. And they also have it by quarter for the last 4 quarters, and then also the third quarter of 2022. And we can see right here that their total revenues for the third quarter of 2022 came out to be $21.4 billion, which is up year over year from $13.7 billion in the third quarter of 2021. So that's an increase in their top line revenues of about 56% year over year, which is absolute massive growth. Their gross profit for the third quarter of 2022 came out to be about $5.3 billion, which is up from $3.6 billion year over year. So that's an increase of about 47%. And then their net income, if we scroll down to the bottom here, attributable to common shareholders, came out to be about $3.2 billion, up from about $1.6 billion in the third quarter of 2021. So that's an increase in their net income of 103% year over year. So that is obviously massive earnings growth for Tesla, and could obviously be one of the reasons contributing to the fact that their stock price has risen so much historically, is because they continually produce record earnings and free cash flow amounts in their financial statements. And so for their balance sheet right here, we can see that their total assets increased year over year from about $57 billion to $74 billion. So that's obviously good news, because the more assets and property, plant, and equipment that they have, the more vehicles they're going to be able to produce and the more money their company is going to be able to make. And then right here, we can see their total liabilities compared to their total stockholders' equity. We can see they have total liabilities of about $33.3 billion and then total stockholders' equity of about $39.8 billion. So most of their business is financed by equity as opposed to liabilities. And then lastly, right here on their cash flow statement, they point out that their net cash provided by operating activities increased year over year from about $3.1 billion to $5.1 billion. So not only are their earnings results increasing, but they're also not just selling cars on credit, but they're actually collecting the cash from their customers, which is really important for a company like Tesla, because their business is growing so fast, so they need that cash in their business in order to continually ramp up production to meet the demand for their vehicles. And then if we subtract the property, plant, and equipment, or capital expenditures, from their net cash provided by operating activities for all these quarters, we can see that the free cash flow, which is obviously the operating cash flow minus capital expenditures, increased about 148% year over year. The free cash flow for the third quarter of 2021 comes out to a little under $2 billion or so, a little under $1 to $2 billion. But for the third quarter of 2022, their free cash flow came out to be about $3.3 billion. And then for the last 3 months of the year 2022, they had about $8.9 billion of free cash flow. And obviously, free cash flow is one of Warren Buffett's favorite metrics to measure, because if a company has a lot of free cash flow, that's extra capital that they're able to use to then reinvest into their company and grow their earnings with earned capital, as opposed to raising money from new partners, which would obviously dilute previous shareholders. And we can see that their net cash used in investing activities was about $2.7 billion, and they had lastly about $712 million of net cash used in their financing activities. And something else that was pretty interesting in this report that I wanted to look at was on page 18, where they show a pretty interesting chart right here. It shows their quarterly key metrics. Right here they have vehicle deliveries, their operating cash flow, and their free cash flow. And then they also have their net income and their adjusted earnings before interest, taxes, depreciation, and amortization. And we can see that quarterly, all of these metrics have been increasing pretty rapidly. So a lot of really good growth for Tesla. And then lastly, on page 20, we can see they're doing a little bit of a competitor analysis here, comparing Tesla to the automotive industry as well as the S&P 500 for year-over-year revenue growth and for their operating profit margin. And we can see that based on these charts that Tesla has reported, historically speaking, much larger revenue growth for each of their quarters than the rest of the automotive industry and the S&P 500. And on top of that, their growth for their operating profit margins, that's increased much faster than the S&P 500 and the rest of the automotive industry. So pretty interesting to see how Tesla ranks up against their competitors. And so now right here is my discounted cash flow model. I basically took some estimates from Yahoo Finance to try to estimate the intrinsic value per share for Tesla's company. And Yahoo Finance is basically estimating that they believe Tesla's going to grow at about 48% compounded annually for the next 5 years. And so just to try to keep my estimate conservative as possible, I cut that value in half to about 24% for the next 5 years after that. They had about $4.98 billion of free cash flow in 2021, and they currently have about $12.2 billion of cash sitting on their balance sheet when you net that against the total debt on their balance sheet. And then they have about 3 billion shares outstanding, a little over 3 billion shares outstanding. And so with these metrics in mind, we can see the intrinsic value per share for Tesla is estimated to be about $139 per share with these 50% growth rates. And so unfortunately, if we look at their share price right here, the share price they're currently trading at, based on these estimates from Yahoo Finance, it looks like Tesla is currently trading above their intrinsic value per share, since they're trading at $228 per share, and the intrinsic value per share is estimated to be about $139 per share. So if you wanted to get at least a 10% return on your investment, taking into consideration that the company is going to grow at this growth rate and the fact that this is the amount of cash historically that they've produced and that's currently sitting on their balance sheet, you would ideally want to buy into the company at a share price of around $139 per share. But that being said, we can see from the stock price that Tesla is trading a lot lower than they were at their all-time high. So if you were going to try to make a judgment call as to whether or not to buy into Tesla stock to take advantage of the future growth of the company, then it's possible that the current share price could be a good price to buy into the company, even though they're trading at about 69 times earnings right now. If their earnings continue to increase in the future, then obviously buying into the company at this share price might actually be worth it if the company continues to grow at the same rate that it's been growing historically. But that is a very optimistic valuation estimate to make. I typically try to be a little bit more conservative in my valuation estimates, and so this is the one that I came up with, but I definitely encourage everyone to do your own due diligence when it comes to estimating your company valuations. But lastly, on the right-hand side here, I wanted to do a little bit of a competitor analysis of my own to see how Tesla ranks up against some of the other bigger players in the automotive industry. And we can see I compared them against General Motors, Ford, and NIO, which is a Chinese EV company. And we can see that across the board, Tesla has the highest gross profit margin at about 25%, with General Motors coming in second place at 20%. And then in terms of net profit margin, it looks like Ford actually has the highest net profit margin out of the four companies at about 13%, with Tesla coming in at 10%. And then Tesla has the greatest return on their assets. So they're utilizing their assets the best out of the four companies to get a return on their business at about 9%, with Ford coming in second at 6%. And interestingly, we can see that the Chinese electric vehicle company on the right-hand side here, they actually are not profitable, and that's why their net profit margin and their return on assets comes out to be a negative ratio. And so based on this competitor analysis, it looks like Ford is potentially Tesla's number one competitor at the moment in terms of trying to gain market share in the EV market at the moment. But that being said, Tesla is obviously very competitive with their 25% gross profit margin and their near 10% return on assets. So from a competitor analysis perspective, it looks like Tesla is definitely one of the better companies in this industry at the moment, very competitive. But from an intrinsic value standpoint, based on some of the estimates from Yahoo Finance that I used in this video, it looks like Tesla might not be trading below intrinsic value per share at the moment. But I would definitely love to know what everyone watching this video thinks about Tesla. Is it a good buying opportunity right now in the stock market? Let me know in the comment section down below what you think. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.